We asked the world's best artificial intelligences to predict the stock market and trade their predictions. The results? They're absolutely crazy. I'll show you everything about this experiment in this video. Let's go. Okay, so imagine an AI looking at a stock chart and deciding in 1 second whether to buy, sell, or do nothing. No technical analysis, no fundamental analysis, no news, just visuals. Could this work? Well, that's actually a question we asked ourselves, so we decided to do a crazy experiment. We took 100 screenshots from the Nasdaq chart and sent them to 4 AI models. GPT 4.1 from OpenAI, GPT 4o also from OpenAI, Gemini 2.5 Pro from Google, and Pixtral from the French company Mistral. And to each model, we asked this simple question. Looking at this chart, what would you do? Would you buy, sell, or do nothing? But if you buy or sell, give us a take profit and stop loss level. Once we had all their answers, we recreated all the trades given by each AI to see what would have happened if we had followed all of them precisely. And what we discovered, it's not just surprising, it's clearly crazy and it tells a lot about the potential future of AI in trading. But before showing you the results, let me explain to you exactly how we set up this experiment technically. This is important because it takes rigor to carry out such an experiment to be able to draw conclusions from it. First, the 100 charts. We extracted them from the price history of the Nasdaq futures contract on a 15-minute chart. The screenshots of these charts spanned over the last 10 years, and the moments chosen were completely random. So on some charts we might be in a violent crisis, on some other charts we might be in an ultra calm period, while on some other charts we might be in a very bullish period. And I want to make it clear that no, we did not scroll over the last 10 years on the 15-minute chart on the Nasdaq to take screenshots. The process was fully automated. We gave our program the price history and the charts of the Nasdaq over the last 10 years, and it randomized the moments at which it would take screenshots. And to automate this whole process, our partnership with TradingView was very useful. If we wanted to repeat such a test in the future, no matter the asset, no matter the time period, no matter the time frame, we could automate it in a loop and do it again and again. The screenshots of the charts did not include any indicator, so no RSI, no MACD, and no drawings such as trend lines or supports and resistance zones. It's really just raw price action, as if to test the AI's visual ability to predict future prices from it. 4 different AI models were then questioned. First, GPT 4.1, which is known for its advanced reasoning ability and developed by OpenAI. The third one was Gemini 2.5 Pro, developed by a competitor of OpenAI, Google. And finally, the 4th model was Pixtral, a lesser-known model developed by the French company Mistral. And this model is specialized in image analysis. So we had a battle between these 4 models, 3 of which were American ones and 1 was a French one. Each model was then sent the 100 screenshots of the Nasdaq chart and asked if they saw an interesting trade ID to take or not. If yes, we asked them in what direction, at what entry price they would get in, and what would their stop loss and take profit levels be. And the models could also decide not to take any trade. If they didn't see anything interested, then they could stay out. But if the models saw an interesting trade and wanted to take a position, they didn't have to do it instantly at the market price on the chart. They could either decide to place a limit order or a stop order if they wanted to get in at a further date if the price was reached. So actually, when the models saw the chart, they could identify a trade scenario that would trigger later. It's just like you. If you are sitting in front of your screen, in front of the charts, you can plan a trade for a future date in case your limit price or stop price is reached. To avoid bias in the phrasing of our prompts, we used the exact same prompt for each model for each screenshot. The idea was really to test their visual analytical skills, not to discuss or improvise. And we asked them to give us an answer in a very specific format. We then stored all of their responses and fed them to our backtest engine to see what would have happened to a capital if we had followed all of their trade IDs precisely. And you will see that some AI took a lot of risk, while some others remained way more cautious. And that had an impact on the final results. I see that GPT 4.1 took 49 trades, GPT 4o took 33 trades, Gemini 2.5 Pro took 96 trades and Pixtral took 74 trades. Just before we begin, please let me know in the comment sections what model you think will have the best results. I'm really curious to know and see if you had any pre-made opinion. As a reminder, at most, there could only be 100 trades since we sent 100 charts. So how about we start with the AI that was the most cautious, which is GPT-4o. So here are the results we would have got if we had followed all the trades from GPT-4o. And I didn't mention it before, but the risk on each trade is 2% of the capital. That means if our stop loss is hit, we would lose 2% of the capital that we have at the time. So as you can see on the equity curve, basically our capital kind of goes nowhere. The return over 100 trades was 4.3% with a max drawdown of minus 11%. And in terms of success to identify good trade IDs, we have a win rate of 42% with a risk-reward ratio on average of 1.5. So that's not that bad. It brings us into positive expectancy territory. But one of the problems is that it only took 33 trades. So basically it didn't get involved much. Though we have a risk-reward ratio that is pretty decent compared to the win rate, we would have got better results if GPT-4o had taken more trades. At least that's what we can suppose if the win rate and risk-reward ratio remain constant even if we take more trades. So let's now see what happens if we take a slightly more aggressive model, the other one from OpenAI, GPT 4.1. Alright, so here are the results for GPT 4.1, and we can see that out of the 100 trades, the total return is slightly better at 5.9% with a lower drawdown of minus 7%. This AI took 49 trades, but if we look at the win rate and the risk-reward ratio, we see that we have a win rate of about 51% with a risk-reward ratio of only 1. So that's like close to 50-50 and flipping a coin. So basically, 51% of the time we would win one and 49% of the time we would lose one. That's kind of like flipping a coin there. Such metrics are clearly fragile and not a sign of robustness or the ability to find and identify good trade IDs that clearly have an edge. So the trades from GPT 4.1 were very similar to just randomness. So overall, even though we have a slightly better return and lower drawdown, this is not really a sign of a better interpretation or better visual analytical skills from GPT 4.1 compared to GPT 4o. So let's now see if OpenAI's competitor, Google, with Gemini 2.5 Pro, which was the most aggressive model with 96 trade, was able to do better than that. Whoopsie. Nope, not at all. Actually, it's way worse. Total return of minus 22% with a max drawdown of minus 33%, and the win rate is very low at 32% only with a risk-reward ratio that's not high enough to match such a low win rate. So that clearly brings the strategy into negative expectancy territory. And the direction of the equity curve, well, it's clearly going down. So we can only assume that the more we would let Gemini 2.5 Pro, the lower and lower our capital would go. So taking more trades did not translate into better results. And actually, one funny thing here is that by looking at the stats from these trading strategies, if we didn't know it was AI models behind, we could really identify kind of like personalities from traders. Some of them would be more cautious and aiming at lower risk-reward ratios, while some others would be way more aggressive by taking more trades, but that wouldn't translate into better results. So it's really similar to the different typologies of clients that brokers might see when they analyze the results and trades of their clients. But anyway, so far, the 3 American models were pretty disappointing, right? And I'm sorry if you expected that this would potentially be the final holy grail that would make trading so easy for every one of us. So now our last hope is Pixtral, the model of the Frenchies, made in France. Will it be able to do better than the American models? And the answer is yes. Voila! 118% return with a max drawdown of only minus 7%. The win rate is really good at almost 60%. So basically it wins 6 out of every 10 trades. And the risk to reward ratio is also pretty nice for such a win rate with 1.36, which brings the expectancy into a very positive territory. And this clearly reflects on the equity curve because it's basically almost going up all the time with minor consolidation phases. And it did get involved quite a lot with 74 trades out of the maximum of 100. So in other words, Pixtral was really on fire at this game. You see, us Frenchies can do more than baguettes. But the result of Pixtral might not be a coincidence because, as I mentioned at the beginning, this model is specialized in image analysis. And even if we had made it take more risk, the results would still be great. Look here, I just double the risk on each trade. And yeah, the max drawdown gets bigger at -14, but the total return would have increased at 355%. But hold on a second there. Don't go directly on the Pixtral website and start sending screenshots of your trading charts and let it make decisions for you. In order to know if this was just pure luck or actual analytical skills, or if it cheated a bit because it might have known historical Nasdaq prices, we would need to rerun this experiment by doing a lot more trades. So if this is something you would like to see, and if you like this experiment, please let me know down in the comment section and we could rerun it with 1,000 trades this time. In the description below, you'll also find a link to subscribe to our newsletter, because this is typically the type of information and findings that we would share with you. In the future, imagine logging in to your charting platform, take a screenshot of the chart, send it to an AI, and let it decide what would be the ideal trade today. That would be surreal, right? It wouldn't be trader against trader anymore, but more like AI against AI in the market. But to see if something like this could become a reality soon enough, then we need to do the bigger experiment with way more trades. At Opposite, we're going to dig deeper into this because this experiment and the results really intrigued us. If you like this video, please give us a thumbs up, feel free to subscribe to the channel or leave a comment, and we'll see you in the next one.